In this video, we'll run through everything you need to know about being a financial advisor and how to get there, aiming you with the tips and advice you need for each stage. Keep watching as we'll be covering what financial advisors do, how much a typical financial advisor earns, how many hours they work, the benefits of being a financial advisor, the difference between IFA and restricted, whether to be employed or self-employed, the required qualifications, and how to become an advisor. So what do financial advisors do? Financial advisors help people to plan and manage their current and future finances, whether that be helping someone plan their retirement or advising them how to invest and save. When it comes to finances, financial advisors have a large breadth of services they can offer advice on. For every person's life, their financial needs and goals grow with them. For example, when a person who is looking to purchase their first home, they'll be thinking about mortgages and life insurance, saving for that first deposit. Someone who's growing older may be thinking about retirement plans and pensions, saving for the future. A financial advisor can help with all of these things and more by devising a detailed financial plan. Financial advisors look at each of their individual clients' finances and their goals and try to align the two. Depending on the authorisations they have, this can involve recommending their clients the best savings accounts, mortgages, insurance services, pensions and investment advice. A large part of a financial advisor's job is the justifications behind the products they advise. Financial advisors must be meticulous at explaining their process in order to explain why they have come to the conclusions that they have, instilling trust in their clients. An average list of duties for a financial advisor can look like liaising with back office staff, meeting performance and sales targets, providing advice to clients, talking through their finances and plans, travelling to meet clients, staying up to date with current trends in the market, sourcing new business opportunities, researching financial products and explaining them simply and clearly, updating clients about their investments, attending business meetings and networking events, creating marketing literature, remaining compliant at all times, nurturing leads, developing your career and knowledge, liaising with product providers, producing financial reports, keeping up to date with new products and law changes, and so much more. Of course, you can easily invest in back office support that may help with some of these duties and lessen the workload. So how much does a financial advisor earn? When thinking of starting a new career journey, it's only natural to consider how much money said career pays. There is potential to earn a very comfortable amount of money as a financial advisor. However, there is definitely not a conclusive sum that you can expect to earn. There is a big range in earnings that financial advisors take home, and financial advisors don't always earn a salary from an employer. In fact, it's becoming increasingly common for advisors to be self-employed and earn a commission rather than a set salary. Here are some examples of what different websites believe a financial advisor's average earnings are. Here at Premier Jobs UK, we see around 40 to 70,000 plus bonuses. Prospects say that senior financial advisors that work with an average client base can earn around £60,000 per annum. Reed say between 64 to 70,000. Quilter say between 70 and 100,000. And finally, Total Jobs say around 65,000 each year. So how long does a financial advisor work? Well, typically their contractual requirement sees them work between 35 to 40 hours per week. However, this can vary. An important part of being a financial advisor is building good relationship and rapport with your clients. Because of this, sometimes your work hours may become unsociable because your clients often have busy working schedules. Therefore, it is not uncommon for financial advisors to have to work on Saturdays or take appointments in the evenings. However, this isn't always the case. The benefits of being a financial advisor is that being a financial advisor in many ways is an attractive career. Some of the positives we recognise are, it's a career that has a high earning potential and typically well paid from the start. Finances are often the biggest stress in people's lives, and helping them plan their finances in order could relieve them of this stress, making your job highly rewarding. There's also a lot of opportunity in the market. The average financial advisor is 57 years old, according to St James's Place, as many financial advisors are nearing retirement, leaving it open for the next wave of the new generation of financial advisors to join. Being a financial advisor is about working with people, and during your career you'll build a large network of professional connections. Due to the time and rapport built with these clients, you will surely make personal connections as well. This can come in handy during the rest of your career, and you can utilise this network of people. There are two main types of financial advisors. independent financial advisors and restricted financial advisors. Both can offer great advice and they are both good career options. The main differences are independent financial advisors, or IFAs, have no restrictions on the products and providers they can advise their clients with. They also have no restrictions on the areas of the market they advise on. A financial advisor's aim is to find out their clients' financial goals and strategies to create a plan that includes products that can help them to reach this. So the benefits of being an independent financial advisor is that you have the freedom to give the most personalised advice to a client due to your unrestricted access to the products on the market. Another benefit of being an independent financial advisor is that it makes you stand out. It's more common for advisors to be restricted rather than independent, so this can be a real differentiator for potential clients. Restricted advisors, on the other hand, focus on a selection of products and providers that are limited. However, this doesn't mean they can sometimes access exclusive rates or products due to working closely with those providers. Usually they'll have a small amount of leeway to go off panel, but the vast majority of advice must be using the particular range of products selected. A restricted financial advisor also could be an advisor who only advises on one particular part of the market, i.e. investments or pensions. Therefore, they are restricted by proxy. So what are the benefits of being a restricted financial advisor? A restricted advisor has a significantly lower amount of due diligence to do when advising products, as most of this will be done by the firm and their compliance team. It makes the advisor's job much simpler in comparison to being an independent advisor. There are thousands of products on the market. Limiting the number of products that an advisor can allow them to focus on enables them to focus more on their clients and doing things like fact finding and writing suitability letters. So should I become restricted or independent? There are pros and cons to becoming either type of advisor. It is natural to think that becoming an independent financial advisor would be the better option. For some individuals this will be true. Some advisors will thrive on giving advice that isn't limited to a certain set of products and providers. However, for some, being a restricted advisor will make for a much less stressful life, as having access to the thousands of products and providers on the market is such a broad range. Overall, you can have a successful and fulfilling career in either role, and you may see some people switch between being restricted and independent throughout their career. Employed versus self-employed, which is better for a financial advisor? In the financial advisor industry, commonly there will be self-employed and employed jobs. There are positives and negatives for both, and everyone works differently, so it's up to you to figure out what role suits you best and your circumstances. So the advantage of an employed role is that it offers advisors a fixed salary. A lot of advisors will value the stability of a guaranteed income each month. You often will service a client bank and will be provided with leads in an employed role. This can make an advisor's life a lot easier as they can grow their network through the clients and leads provided and have a good flow without having to network too much themselves. Some people will thrive with having management in place to give them that structure. What's the advantage of self-employed financial advisor roles? Well, you get to be your own boss and structure your days, and that's the type of freedom that you can only get from a self-employed position. There are no limits on how much you can earn as a self-employed advisor. Being self-employed often means they receive a large proportion of the income they produce. A hard-working, motivated advisor typically will have a larger earning potential being self-employed than being employed. You can build up your client bank which you can pass on or sell at the end of your career. Usually self-employed advisors will have to be fairly, but not completely, self-sufficient in finding their clients and leads. Financial advisors often offer lifetime advice though, so having repeat clients will minimise the severity and the impact of this. So what are the disadvantages of employed financial advisor roles? Well, as an employed advisor, there will be limitations to how much money you can make. Your commission rates or your bonus structure will have lower earning potential when compared to a self-employed advisor role. When you're employed, you'll likely not have a client bank that you can sell on when you retire, as it will often be owned by the company you work for. As with all employed jobs, there is potential to be micromanaged, the freedom of planning your own days and working within your own time schedule. So what's the disadvantage of self-employed financial advisor roles? Well, the lack of financial stability is a big disadvantage or concern for self-employed advisors. Self-employed advisors rely on their commission earnings, so that if you had a month which didn't work out too well, or due to ill health, your earnings could be jeopardised. Self-employed advisors also have to be extremely self-motivated as they don't have any structure. They need to be organised and time managed to a very high standard, otherwise you risk out on losing business. When you're self-employed, you may not have access to back office support and may have to pay a salary or monthly fee to access this result. Otherwise your admin duties will quickly stack up. So which should I be? When choosing which is best for you, you should consider what environment you work best in and your personal circumstances. Do you thrive on the structure, or do you prefer to decide how to do things yourself? You should also consider what you place more value on, a high commission rate or a consistent salary. Self-employed advisors also need to have a large amount of self-motivation to succeed, so it's important to consider whether this would work for you. Not everyone has this, so it's definitely something to think of before making a decision. We also advise that you consult an expert who can help you discuss your options and decide which route is best for your circumstances. We have multiple experts whom you can call and have a free, no pressure chat with us. So contact us today. Our details are in the description. So what qualifications do I need to become a financial advisor? To become a financial advisor, you'll have to have an FCA recognised qualification in order to become authorised. The two main recognised professional bodies that award such qualifications are the LIBF and the CII. First is the Diploma in Financial Planning, or DIP-PFS, by the CII. Some key benefits of the DIP-PFS include: there is flexibility in the modules you pick. You will have membership to a PFS region and CII local institute, providing local CPD events, training and network opportunities. You can enter a CPD scheme after completion of the DIP-PFS to keep your skills and knowledge up to date. As a member, you will get market news and updates from the membership magazine, Personal Finance Professional. You will also be eligible for their benefit scheme. This is called Perks and gives you access to lots of discounts on high street brands and shops. The links to our content on the DIP-PFS will be linked down below. Secondly is the Diploma of Financial Advisors, known as DIPFA by the LIBF. Key facts for the DIPFA is the LIBF diploma is more holistic, as some would argue it gives a more realistic view to aspiring advisors. The LIBF recommends students dedicate 400 hours of study time, which is average of about 9 months. The two units, Unit 1, Financial Services, Regulations and Ethics, FSRE, and Unit 2, Advanced Financial Advice, known as AFA. There's a mixture of multiple choice exams and coursework. The LIBF diploma will cost you about $1,160 with tutor support, or $1,050 without tutor support, nearly half of the DIP-PFS. For some, the idea of sitting 6 exams will be too tedious, making the LIBF diploma a better option. Check out the description box for links to our content on the DIPFA. So which should I take? Should I take DIPFA or DIP-PFS to become a financial advisor? Well, both of these diplomas are brilliant choices for those looking to have a prosperous career in financial advice. Although there are definitely differences between them, overall both qualifications can be great options for an aspiring financial advisor. It's just up to you as the individual to decide which diploma is the best option for you. We have some content comparing these two qualifications, and the links for that is in the description box below. So what are desirable qualities of a financial advisor? A financial advisor's job is largely about liaising with clients. You are also trusted to give sound advice on people's livelihood, which is a large responsibility, so it's vital that every financial advisor possesses the correct qualities. Some valuable qualities for a financial advisor to have are analytical thinking. A large proportion of your job as a financial advisor will benefit if you are a strong analytical thinker. As a financial advisor, you need to make your client's financial goals reality. This won't always be as simple as you desire, and it's important that you're able to consider market factors like market trends and optimum investment return. You need to be relationship focused. One of the key components to doing your job successfully will be building and maintaining your relationships with your clients. Many of your potential clients will be searching for prolonged financial advice, so it's important for you to place value on the client relationships you encounter. Conscientious. A financial advisor cannot make impulsive decisions. Your clients will be placing a large amount of trust in you, and that shouldn't be taken advantage of. Staying conscientious helps maintain a brilliant standard of advice. There are a multitude of other skills that will benefit your career. Looking introspectively is really important here. Some people will have these traits naturally, but if you don't, there are more ways you can build upon these skills. So for example, the more problem-solving tasks you complete, the stronger your analytical thinking will become. When you're in your current role or just in day-to-day life, you will encounter things that go wrong. You should make a note of these situations too in your future financial advisor interviews, as you'll surely be asked around circumstances like this. To build on your ability to form great professional relationships, put yourself in situations where there are lots of new people. Strike up conversations where you can, and this will help you to become more personable. Being conscientious comes hand in hand with being passionate as well. If you're really determined to succeed in an advisor position, then being thorough should come naturally. It also helps to recognise how much trust advisors, clients put in them, as finances are such an important part of life. So what are the different ways to become a financial advisor? Due to the seriousness of the profession, it can take many years for people to reach the occupation of financial advisor. As we mentioned earlier, in the UK the average age of a financial advisor is 57, according to St James's Place. The main options are: option 1, career progression. The majority of advisors will work their way up to an advisory job, but will get started in administration first. Then usually, once you've built up enough experience in a financial planning administrator job, you'll progress into a power planning position. Typically after we see people being a power planner for a while, is when we see people starting to transition into advisory positions. These advisory positions will commonly be trainee roles at first. Only then you will have the experience that's required for most financial advisor roles. Option 2 is trainee financial advisor. Of course, this is not a path that every advisor will take. Some trainee financial advisor jobs will give opportunities for younger, less experienced people, depending on their ambition and educational achievements. These opportunities are usually quite rare and very popular. Option 3, transitioning into financial advice. Some people end up in financial advisor roles after being on the mortgage side of financial services. Typically, a mortgage advisor will work towards this role from a mortgage administration position. However, sometimes companies looking to take on financial advisors will take on those who've previously worked in the mortgage sector. This is often attractive to previous mortgage advisors who want a career change. Of course, there are many options above these three. These are just the most common ways we see on a day-to-day basis. So how to write a CV for a financial advisor? Before starting your career journey as a financial advisor, it's important you are aware of what makes a great CV. As the financial services industry is such a professional industry, it is important that your CV is up to scratch. What should a financial advisor's CV contain? As an aspiring financial advisor, getting your CV correct is very important, as an employer will decide within seconds from your CV whether you're worth their time pursuing. Your CV needs to be truthful, yet enticing to a current employer, especially as a trainee where you won't have any existing experience. As a financial advisor, arguably the most pertinent part of your CV is your experience. The financial services industry and advisors advise on matters that could have devastating effects if done wrong. Employers typically see it as the more experienced an advisor, the more trustworthy and knowledgeable they will be perceived. Earlier on in this video, we covered the career pathways that can lead you into financial advisory, so an experience that is relevant will benefit. Jobs that show you can be trusted, have good people skills, and are good with numbers will all make great additions to your financial advisor CV. If you're a trainee, focusing on the specific skills and traits that would make you good at the role is key. Other important aspects for your financial advisor CV. Besides experience, there are definitely some ways to wow an employer or firm using your CV. Some of these are as follows. Production. The financial advice industry is a revenue-driven one. Therefore, the more revenue you can bring as an advisor, the more employable and desirable you will become. Values. It's important to showcase your values on a financial advisor CV. Some firms are value-driven, and having aligning values could land you a position. For more advice, check out our complete guide to writing a fantastic financial services CV. The link will be in the description. Before your illustrious financial advisor career starts, it is important to know how to ace the interview. The most common style of interview you will encounter as an aspiring financial advisor is competency-based interviews. Below are some of our guidance, tips and advice to help you excel in your interview. Most competency-based interviews will last around an hour. This can massively vary and depend on how well the interview has gone. Other factors that can affect the time of the interview, however, are how many stages the company has in the recruitment process and how many candidates are interviewing for the role. Check out our previous competency-based interview content for more information. The links will be in the description. Some financial advisor core competencies. So a helpful competency that many financial advisors share is detail orientation. It is important for advisors to listen to their clients' requests and advise them accordingly. To do so successfully, they need to keep in mind multiple different products, figures, market trends, etc. People skills. Client relationship skills are pertinent to an advisory role, as your job will be customer based. As an advisor, your clients place a lot of trust in you, so your relationships with them are vital. Decisiveness. Decision making is a brilliant competency for an advisor to have. Advisors need to be confident in the advice they give to their clients, and being able to make decisions even whilst in a high pressure job will certainly benefit you. So how do I identify my personal core competencies for financial advice? In conjunction with some general financial advisor core competencies, it is a good idea to quiz yourself to help you work out your personal competencies. Think back to what you were doing previously and how that could help you here. How would others describe you? What are you really good at? Why are you good at those things? What are some of your biggest achievements? What was required from you to achieve these? Once you land that first role as a financial advisor or trainee financial advisor, you can then set about moving up the ranks. The typical progression if you're in an employed role looks like administrator, power planner, trainee financial advisor, then senior financial advisor, and then often chartered financial advisor, and then potentially on into management as, say, head of financial advisors. In the coming months, we'll be looking to expand our content to cover how to become a chartered financial advisor and what that entails, so keep your eyes peeled and make sure to subscribe. Typically, career progression means more responsibility, and more responsibility means more pay. We have covered training financial advisor and financial advisor roles already in this video, so just to add an additional layer of detail for the following roles is a senior financial advisor typically has 5+ years of experience as a financial advisor and are at a point where they can mentor other financial advisors in the team and potentially train up new trainees. They are also recognised and sought after by clients for their experience, and as such can potentially charge more for their services. Chartered financial advisors can typically provide advice on more technical and nuanced matters due to their additional qualifications and a vast array of experience. As well as undertaking the same duties as those below them, chartered financial advisors usually have a specialist niche that they can lean towards. Head of financial advisors. Typically, a head of financial advisors would have done every other role at one point in their career and is now at the point where they can manage, lead and develop a team. Usually they'll have 10 to 15+ years in the industry and have seen most of what there is to see, placing them well to lead others. To conclude, in this video we've covered a large spectrum of topics that will all help you in your pursuit of a career as a financial advisor. It can always help to talk to a professional who could potentially grant you with even more information on how to best achieve a career as a financial advisor for your circumstances. Call us now for a free, no pressure chat with one of our experts who can tell you all things financial services. Our details can be found in the description box. Thank you for watching today's video. Please subscribe and turn on post notifications so you don't miss any of our future content.